I've been immersed in finance and investment management for over a decade through my education and also work experience. But these are 5 ETF investing mistakes that I made as an ETF investing beginner and some that I actually made as a seasoned ETF investor. And so in this video, I want to help you avoid these common ETF investing mistakes that I'll never make again. And for each ETF mistake, I'll explain why it's a problem and why most people actually make these mistakes, which might explain certain discrepancies that you might have noticed in your own portfolio if you have one. If you're a beginner, ETFs are the best way to start investing, so I'll also share tools with you that I use to avoid making these ETF mistakes. My name is Yvonne, and on this channel, we talk about all things personal finance. Let's get started. In case you don't know what an ETF is an exchange traded fund, which is a basket of assets like stocks, bonds, commodities that you can trade on the stock market as a unit. Instead of buying shares or stocks in individual companies like Microsoft, Nvidia, Apple, buying an ETF is the most affordable and accessible way of actually investing in these companies. Because it provides instant diversification, it's also cheap in terms of expense ratios, which is basically the cost of purchasing any of these ETFs. And the best part is that ETFs allow you to invest in other markets that might have been too expensive for you to access. The main thing with ETFs, like I said, is diversifying your risk of loss of capital, because you're not just invested in one stock or one asset. I've done a video on the different types of ETFs and the best ETFs out there in one of the previous videos. So at the end of this video, I suggest you actually go and check it out. So the first ETF investing mistake that I ever made, that you're probably making as well, is fund overlap. The mistake I made was buying very similar ETFs that literally had the same holdings. That is, that were invested in the same companies. So I was basically double dipping. Let me show you an example. So I used this tool called etfrc.com to actually check out my fund overlap. And in my case, I used to hold the SPY, the VTI, and the most popular Vanguard ETF, the VOO. If you're in the United States, you know this. It's either the VOO or the SCHB. I was invested in all three. And the overlap between the VTI and the SPY was 86%. So much for diversification. And even worse with the SPY and the VOO, because they're basically tracking the same index. So it was 100% overlap. So if you're an ETF beginner, it's really important to hold one of each type of ETF and make sure that you do your fund overlap research. Otherwise, it will actually cost you in the long run. Under a category like broad market ETFs, so if you go for the VTI, just go with the VTI and load as much as you can there, instead of going into the VTI, then also investing in the SPY. On Brockstock and other platforms, they have these ETFs, and I'm actually only invested in VTI now. Let me know if you have the same problem now, or if you noticed the problem and actually fixed it. I also use this fund overlap tool to actually just analyze my portfolio to see areas that I can improve. If you're going to attend the ETF Investing Masterclass that I'm holding on the 7th of December, this is one of the many tools that I've used to optimize my portfolio. Please hit the like button if any of this information is useful. And leave a question or share your story in the comment section so that we can all learn from each other. The second common ETF mistake that I made was choosing the wrong brokerage firm. So for those who don't know, I'm currently based in South Africa. So I opened an eToro, even though there were other platforms that were more cost effective for me to access international markets. It cost me an arm and a leg at the time until I started using Easy Equities, and now I'm actually using Brockstock, which I find to be more cost effective, has an amazing user-friendly interface, and also has a large ETF database for me to choose from, and actually pays out dividends on US stocks and ETFs. I highly recommend Brockstock as an alternative to some of the other platforms that are available in the market. And if you're interested in testing it out, if you're one of the first 200 people to use my link in the description below, you'll get access to a private ETF investing masterclass that I'll be hosting on the 7th of December. If you comment invest in the comment section, I'll send you a link and I'll see you at the masterclass. Choosing a good brokerage platform is really important because it affects how much you actually pay to invest. You want to choose platforms that will not charge you for being on the platform. And you also want to use a platform that will earn you 8 to 10% interest on uninvested capital. So 8% annual interest on each day that your portfolio has a minimum of 5,000 uninvested capital, and 10% if the uninvested capital is actually above 50,000. That annual interest rate on uninvested funds that you'll be earning proportionately each and every day is actually more than some of the interest rates that you get on high yield savings accounts in South Africa. And so to fix my mistake, I actually moved from the brokerage platform that I'd started on. And I'm now on a cost-effective platform that gives me exceptional market research, is easy to use, but is also cheap for me to use. If you're in South Africa, let me know if you're currently using Brockstock and what your experience has been. And if you're using any other platform, Easy Equities, Frank, I'd like to know from you. Let me know how your experience has been with those platforms, because that was one of the biggest mistakes that I made. The third common ETF investing mistake that I made was not properly defining my investing goals. So before you create your ETF portfolio, it's really important for you to have a clear idea of what your strategy is and what your investment goals are. So are you looking for long-term growth? Are you looking for dividend income? Are you looking for interest income, more stability by incorporating bond ETFs? I didn't do that process. Even though I actually work in the industry, I made that mistake. And so I was out here just Googling best ETF options and not really applying my mind to my intention with each ETF that I was putting in my portfolio. The base of my ETF portfolio, however, is only 4 ETFs, which have been carefully curated after I learned to define my investing goals. And so my investment goals are long-term growth, and I expect high compounded returns. I also want dividend income, and so I invest in dividend ETFs. I want some stability and to diversify away my risk. And so I have an international ETF. I also have a broad market ETF and a bond ETF in my base portfolio. And to just spice things up, I have sector ETFs that help me double down on industries that I'm really bullish on, which means sectors that I believe have great potential for long-term growth. The fourth ETF investing mistake that I ever made, and I did this on my dividend ETFs, was not selecting the box to automatically reinvest my dividend income. So I had funds that were just accumulating in my brokerage account and they weren't actually earning interest. Now that I'm on Brockstock, I actually earn interest on any uninvested funds, and I actually fixed that issue by just choosing to reinvest my dividends. Reinvesting your dividends increases your total return, which is made up of your capital gains, so the price that you bought versus the current price, plus any dividend income that you actually make. So it's really important to put that money back so that you can boost your compounded returns. Let me know if you've made a similar mistake, or tell me how dividend income has actually changed your life. There's some people that I know who are living off of dividend income. And so if you're one of those people, leave a comment in the comment section so that we can start a conversation. And then the last ETF investing mistake that I'll never make again is not analyzing the ETF profiles. So I'd read the summary but not actually go into the details. Expense ratios, dividend yields are really important things to look at, and you have to actually analyze each ETF and look at the merits of each. If you'd like to use the simple investing tool that I use to actually make some of these decisions, just comment ETF investing in the comment section and I'll send you a link. And so those are the 5 common ETF investing mistakes that I'll never make again and that you should avoid at all costs. If you've liked any part of this video, please hit the like button. And if you haven't already, please subscribe to join the free squad. It won't cost you a thing. And so if you like this video, then you might like other videos on my channel, particularly the one that I did on the 5 types of ETFs, where I actually share my own ETF portfolio. I'll see you over there, or I'll see you in my next one. Thank you so much for watching. Take care.